Welcome to today's webinar titled The 3 Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penn. I'm the Manager of Retirement Services here at VectorVest, and I really am excited about today's presentation. I hope you're excited about it as well. In fact, my promise to you today is going to be that in this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free. Now, I know you probably get flooded with emails promising to help your retirement, and you're probably skeptical and thinking, you know what, go ahead and prove it. Well, we've been doing this a long time. In fact, VectorVest started way back in 1988. Now, in 2017, we began tracking a retirement growth portfolio, and it's averaged about 40% per year. About 40% per year. We also have another portfolio which uses a strategy you'll learn today was started back in 2013 and has averaged about 22% annually. And that doesn't include the nearly $50,000 in dividends. This is a dividend growth portfolio. So those numbers don't represent the dividends paid out. And to take that a step further, that doesn't even include the power of reinvesting those dividends over time. One of our clients, Jerry, told us about his ability to generate consistent income on a monthly basis after going through our training. He said he had went from being hit or miss with his trading and having no methodology at all to where he's now generating 2% extra each month. Now, this webinar is built on results, and I'm going to show you the system that we use to achieve these results. So, if learning how to do that sounds good to you, now is a great time to turn off all your distractions. Close your door, turn off your cell phone, close down any windows on your computer. Please don't multitask, or I think that you're going to miss some important stuff. You want to stay focused, give this your full attention because you'll be learning something that I believe can make a huge positive impact on the rest of your life. So here's how to know if you're in the right place today. You're in the right place if you're worried about the next market collapse wiping away a good chunk of your nest egg, and it's causing you to be ultra conservative and not getting the gains that you see others getting. Or you want to grow your account steadily each year, but it seems like every time you buy something, the market or your stock drops and your portfolio goes nowhere. You're just spinning your wheels. You're in the right place if you don't have an income source that is as steady or as big, and it's causing you to scale back your lifestyle and not do the things that you want to do. And finally, if you fear you won't be able to retire when you want and that you might need to rely on others to take care of you, then you're in the right place. Now, you might be one of those people who over 65 who still have to work, not because you want to, but because you have to, or you're worried about where you'll be left in that position. So let me ask you, does any of that ring true to you? Does that hit home with anybody here? Go ahead and type in the chat box if it does. Just type a yes in there if that's hitting home for you at all. Yeah, Rob says yes. Reg, yeah, sure. A lot of yeses are coming through. There they come. Yeah, it takes a second, but yeah, they're pouring in now. Well, you guys who are typing in yes you're in the right place. Now, after literally decades of working with retirees, we've identified the root cause. Okay, the root cause is that we found the real problem. That root cause is your retirement investing model is broken. But all it takes is a couple of minor tweaks and you can get it fixed. Now, once fixed, your retirement will be on solid footing. And that's what we're going to do here today. The model we use, and we have proven to work, is what we call the 3 P's investing model. Now, the 3 P's are profit. When you think of profit, I want you to think of growing your portfolio or capital appreciation. Right? Profit is the plan to grow your portfolio safely and steadily each year. The next P is when you think of, I want you to think of provide. Think of providing income. Right? It's a system to generate consistent, safe, steady income. And then finally, when you think of preserve, think of the word protect or defend. Preservation of capital is what we're talking about here under preserve. So remember my promise from earlier to build wealth, transform your legacy, and live financially free. You need to grow your investments, generate income, and protect your capital. Those are the three core strategies, the three P's. When you do all three, that is when you'll have financial freedom. So there's a strategic shift that you have to have in your mindset. So that first shift you need to make is the shift from not being in control of your own retirement to where you take control of your retirement. After all, who cares more for your money, you or someone else? Now, you might think you don't have the time or the knowledge or the skill, but you're going to see today that you can do it. It doesn't take a lot of time. You will, and you do have the knowledge, and I'll show you how to leverage off others so that you don't have to do everything yourself. Once you've decided to take control, now that you've made that decision, let's look at the 7 signs that your portfolio will not be ready for retirement. 7 signs that you won't be ready for retirement. Even most people say they care about their money more than someone else would. What do most people end up doing? Well, first, most people trust the government and Social Security to provide the income needed to retire happily. That, however, has many problems. 60% of non-retired workers feel Social Security won't even be around when they retire. And even if it is still around, the Social Security website states that Social Security was never intended to be someone's sole source of retirement income in the first place. The average Social Security benefit is just over $1,500 a month before Medicare premiums are deducted, which leaves you on average, you're left with about $16,000 a year. Obviously, that's not enough. So what do other people do? Well, a lot of people just save their money. You put your hard-earned money away, counting on it to be there when you retire. However, with interest rates so low, not expected to rise anytime soon, inflation is actually higher than the interest you're receiving. So by saving your money, you're actually losing money because your dollars are getting devalued. Next, we have the other folks who just take a set it and forget it approach. They put their money into mutual funds, an IRA, 401k, and hope for the best. Unfortunately, when the market drops and wipes out 30, 40, 50%, many people end up delaying retirement or maybe even have to get back to work. And sometimes it can turn into something like this. When all else fails, you can always play the lottery. I remember there was a commercial, a long time ago, which advertised the lottery. It said, all it takes is $1 and a dream. Well, for many, that $1 turns into 2, then into 10, then into 50. Sometimes you end up spending a few $100s a month on those dreams. Trust me when I tell you that is not the best retirement plan. Another sign says that you can go hire someone to make decisions for you. You can hire somebody. That's what Rob did. That's what Rob here did. He retired back in 2005, and as we all know, the financial crisis hit a couple of years later in 2007. And he had said that we had used professional advisors for direct shares and a few managed funds to build our retirement portfolio, and they all told us to ride it out. By mid-2008, our portfolio had lost 40%. 40%. Our retirement plans were in ruins, we were in total despair, and it looked like he'd have to come out of retirement and get a job. That's what happened to someone who had hired somebody. Now, might not be as dramatic a drop like Rob, but Carol told us that she describes another typical result. She hired an advisor in 2013 to help manage an inheritance after her father passed. And she said by early 2017, I'd finally had the time to take an in-depth look at what the broker she hired was doing and was shocked. Right? It was a mishmash of cookie-cutter funds. After their fees, the net result was just a 1% annual return during a time when the market was doing so much better. Okay, another sign is you decide to spend less. When that happens, you end up tightening the wallet and spending less money. Now, if you're cutting back on your spending, it's because you're worried. That's another sign your portfolio is just not ready for retirement. And finally, if you decided to work longer than you originally intended, it typically means your portfolio is not retirement ready. So the next strategic shift we have to look at, right? If you noticed that there was a theme here, right? If you're exhibiting those signs, okay, it's clear indication that you need to take control. Remember, there are hundreds of thousands of people out there just like Rob and Carol who trusted their money to people who thought were more knowledgeable and more skillful, who ended up losing 40 to 50% of their retirement savings. So even if you have a financial advisor managing some of your money, you certainly need to pay attention, right? Take control. These strategies will give you the techniques to both manage your own money as well as give you the information you need to watch over the work done for you, okay, by any other manager. As we go through these strategies, I want to see how they're how the things can work out. You can do these things in less than 30 minutes a week. So let's go ahead and do that now. Okay, now that, again, that you've decided you're here, you decided to take control, the first thing you need to do is protect your assets, right? Under the preserve P here, we're going to look at first. Instead of worrying about the next market collapse wiping away your nest egg, you need to protect your assets, right? A strategic defense system is what we're talking about here. Okay, a lot of people get caught by surprise when the market drops. After it happens, you hear people on TV and advisors talk about what you should do now and how to make your money back. Right? Always too late. So you need to insure yourself. Right? You need to know when the market is toppy and what to do to ensure your net worth. Here's a look at the market since 1999. Now, let me know in the chat box if you ever bought or owned a really good stock and watched it drop when the market dropped. And I'm not talking about any old stock. I'm talking about a good stock, right? A stock that you say, wow, this is a company that makes money quarter over quarter, year over year. And then you're left scratching your head as you watch it drop, right? And a lot of folks, absolutely. Susan says, Craig, yeah, we've all been there. We've all been there. So let's zoom in on a few of the biggest market moves that have crushed a lot of people here. So let's zoom in here. I'm guessing there are people in this room today who held stocks or managed funds through the bursting of the dot-com bubble. I'm sure there are folks. I know I was working on a trading desk when that happened, and I witnessed it. Right? Now, Lynn had told us that during the dot-com boom, I had taken $80,000 and increased it 5 or 6 times. But in 2000, I proceeded to lose almost everything over the next 2 years. Well, he was pissed, and he needed someone to blame. Now, that happens way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back and spend years trying to recover those losses. Now, here in 2008, when the housing bubble burst, okay, the average mutual fund had dropped over 40%. 40%. Okay. And many people, like Robert, we talked about him earlier, had lost 40% and thought he'd have to come out of retirement and go back to work. Right? That was 2008. Let's fast forward. Just last year, the S&P dropped 34% from its peak. Now, how many of you had your financial advisor call you leading up to any of these events to warn you? I doubt there were many phone calls over that period telling you to get out. I'm going to doubt that. But after the event passes, you may get a call saying, oh, by the way, you're down 30%. Sorry about that. Okay. So that was a huge move. February to March of 2020, it was a 34% move. All right. Which brings us to today. Right? Which brings us to today. Many are worried about the next market collapse. And it will come. We know that over time it will come. Now, some people say you can't time the market. Well, the truth is that you can't predict the market. What we can do is analyze what's going on and analyze that trend. Even though the markets on a daily basis may have ups and downs, if you look at the big picture, you can clearly see the major trends. You can even see smaller trends within the bigger trends. So we may see the market on a daily basis go up and down, but it does over time trend in a given direction. Now, surprisingly, you don't hear this information from talking heads on TV, right? They rarely would say, hey, it's time to get out. The market is in a downtrend. It's a rare occurrence. So I want you to be careful where you get your information, right? Because it's good for their business when people are investing in the market. Advisors still get their fees whether the market goes up or down, so you need to be careful where you get your information. Let's look at how to use the right information so you'll never be on the wrong side of the market for more than 1 or 2 weeks. What you're about to see will ensure your portfolio never collapses again. So you want to make sure you have a system that allows you to determine the market's direction. Some people use things like moving averages on the S&P. I use the guidance from VectorVest. Whatever you do, I suggest you don't listen to the talking heads on TV. Okay? Instead, you should have a system which is not emotional, which is based on empirical data, and has an historical track record. Right? Let's take a look at a few major market moves that we talked about earlier. These were all game changers in our lives for most people. Right? Let's start by looking back at the bursting of the dot-com bubble. Every night we provide guidance just like this. Okay. Back on March 17th of 2000, about a week off the peak, we said in our strategy section of the views that I believe that the rally is exhausted. Downside risk outweighs upside potential. Prudent investors should protect profits and take defensive actions such as buying puts. Okay. Consider any rallies as opportunities to sell stocks at higher prices. Tremendous guidance at this point in time. Okay, were you investing back then? If you were, do you believe that would have been beneficial to you back then to have that type of guidance? Let's fast forward to the next big market collapse when the housing bubble burst. On November 2nd, 2007, just days off of that market top, we said a word to new subscribers. The confirmed down signal that we received yesterday could be the entree into a long bear market. Could be the entree into a long bear market. That was the guidance on November 2nd, 2007. We went on to say, don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Would that guidance have helped you protect yourself? And then if we move to the most recent drop, which happened just last year back on February 14th, just days before the peak, we noticed warning signals in our market indicators. And we went on to say that the price of the VectorVest composite continued to move higher this week, closing at a new record high. However, as the price hit a new high today, the BSR, the buy-sell ratio, closed lower. Add to that, if we look at the 3-month market timing graph, we can see that while the BSR, RT, and MTI closed higher week over week, they are at lower levels today than they were during the January high. This bearish divergence suggests that downside risk outweighs upside potential. Okay, a familiar phrase that we saw back at the dot-com burst. Downside risk outweighs upside potential. Right? Sounds familiar. Right? That's the guidance we were giving right before here. A week later, we said that prudent investors should not buy stocks at this time and that aggressive investors and traders should play the market with a bias to the downside. So would that have been helpful to you? All right, go ahead and type in. I want to interact with you guys. Type in, would that have been helpful? Yes or no? All right, there we go. Okay, yep, they're coming in. Yep, bunch of yeses are coming in. Yeah, it sure was for me, I can tell you that. Okay, now that you know what to look for, now we need to know how to react. Right? Well, what do we do now that we know when the strategic defense needs to be put into place? How do we put it there? Let's look how to protect your entire portfolio. We call it, overall portfolio insurance. I'm going to zoom here back in 2018. Okay, we're just kind of zoom in here. There was another big market drop towards the end of the year. A lot of people forget this one. It was October of 2018, went right up to Christmas Eve of 2018. Huge market drop there. So we're going to zoom in on this time frame. So I'm just zooming into that same time frame. Now, as a retiree, that is a great indication to become defensive, okay, and initiate portfolio insurance. It's a time to act. In fact, to be proactive. Okay, we do that by using a simple option trade that anyone can do. You don't have to be an options expert to do it. It's called buying a put option. Right, we buy the put on the SPY, which is the ETF that tracks the S&P 500. Okay, basically, if the S&P continues to fall, our put option would increase in value. Again, it's an insurance policy. We have an asset, the asset is damaged, the put option rises in value, therefore offsetting the damages. That's what the put option does. Okay. Now, again, near the beginning of October here, we got the confirm down, and that's where that signal to become defensive and initiate that that proactive stance. So become defensive. Buy the SPY put as an insurance policy. For example, a $100,000 portfolio would require 3 puts for protection. We just have a simple equation. Each one would cost, if each costs $604 each. In this example, it would cost me $1,800 to insure my $100,000 asset. Okay, in this case, we would buy the put option, which would give us the right to sell SPY at a certain price by a certain date, and it would protect us to the downside because the put option would rise in value. So think of how much you pay each year to protect your car, and most likely your car isn't worth $100,000. Okay, let's see what happened. Well, it turns out it was a good thing the protection was in place, because at expiration, your put would have a profit of over $11,000, almost $12,000 profit. Now, I'm not saying you would have definitely held it to here, but any type of gains in the put option and anywhere in this range would have helped to mitigate any of those large drawdowns. So even though you might have incurred losses in your portfolio, okay, the put you placed as insurance helped offset that and protected you from a portfolio collapse. It's an insurance policy is all it is. A client I work with named Elaine wrote to me about portfolio insurance that he placed at the beginning of 2018. There were other signals that the market was toppy and we needed to be strategically defensive. He wrote, Jim, because of your teaching, I hedged my portfolio at the end of January of 18 with puts on the SPY. This saved a section of my portfolio. He invested just $835 in insurance. Sold his put less than a month later for over $23,000 profit. Okay. So that was some good news for Elaine. So let me ask you guys a question. How much would this have benefited you during the prior market collapse? Okay, take a second and type in just something quick there. Yeah, a lot of people, a few folks said lots, a lot. Yeah, John says tons. Yeah, it would have helped out, right? It's an insurance policy on an asset that you own is the way to look at it. So the next strategic shift that I want to talk about is that you need to go from worrying about what could happen and being unprepared when it happens to where you have a strategic defense system in place which protects your hard-earned assets, your net worth. Protection is an important, in my opinion, perhaps the most important of the core strategies we're talking about. It's an important part of your retirement investing model, and it's how you'll be able to build wealth, transform your legacy, and live financially free. All right. Be defensive. Know when to be proactive. Okay, the next strategic shift, or the second P in our retirement investing model is profit, I should say. The second P in our retirement investing model is profit. So we want to grow your portfolio. Okay, now that you have the strategic defense system in place to protect your assets, You no longer have to be ultra conservative, as we talked about earlier, when investing. Instead, you'll be able to take full advantage of the market upturns to grow your portfolio. Now, in the past, you might have been plagued by buying stocks that didn't go anywhere or were too volatile, causing you to spin your wheels. Well, there's an easy fix for that. We need you to have the mantra of buying safe stocks rising in price only when the market is rising. Okay, for our retirement account, we want to look primarily at a stock safety, okay, more so than anything else. So while it's fun to hit the home run, right, what happens to most home run hitters when they don't hit a home run? Right? Most home run hitters strike out more than anything else when they don't hit a home run. So that's not what we're looking for in our retirement portfolios. We don't want to strike out. The home run is so enticing to some people that when they go out and they invest, what happens is they end up trading or investing in a way that is totally different than who they really are and what their objectives are and who they want to be. So you start to invest like someone that you're not. And if you're not seeing the returns you want, certainly the answer is not to go faster. Don't try to become a day trader or a really short-term trader to make up your money back quickly or make up for lost time. I use the analogy I want to teach my two boys how to drive. If they were struggling, weren't sure what to do, I didn't sit in the passenger seat and tell them to, slam on the gas pedal and go faster. Of course not. I told them to slow down. You're going to do the same thing. It all starts with this quote from our founder and mentor, Dr. Bart DeLito. Right? He taught us a long time ago that good portfolio management starts with buying the right stocks. And we always look at it, or I certainly do, always look at it as a coach or a GM of a team. Think of any team. Insert whatever team you want here. Right? When you put the best players on the field, or on the ice, or on the court, whatever you want to use, right? When you put the best players on the field, those are the teams that are going to do better. Those are the teams that are going to win. It's the same thing with stocks. You put the best players on the field and your team's going to do better. Okay, so think of it that way. Let me go through a stock safety checklist. Some of the things we look at when we talk about safety. These are just a few of them, and they're very important. Earnings consistency may be the most important. Right? How often the company meets or exceeds its earnings estimates. Right? Consistent, predictable financial performance is what we're looking for. We look at the company's size, the stock's price volatility comes into play when we talk about safety. Debt to equity ratio, a very important factor in the safety of a company, of financial safety. How long has the company been around? Is an important part of the safety checklist. And then finally, the dividend history. Now, to be a safe stock doesn't mean the stock has to pay a dividend, but if it does, it better darn well continue to pay it and grow it over time. So you don't need to be a stock market genius to do this. You don't even need to spend a lot of time to do it. I said earlier, I used the phrase, you're going to leverage off others. Okay. So I told you didn't need to be a stock market genius to do it, right? So let's go ahead and do it. What I'm going to do right now is go into my VectorVest program. Okay, so we're looking at the VectorVest homepage, and if I go to the Viewers tab, it's going to take me into a watch list that I created. Now, this watch list is just came out to 41 stocks, companies that we're all very familiar with. Right? If you own a home, you probably go to Lowe's or Home Depot, help your garden or do whatever you need to do. We all know about Apple. If you use a computer, you go to Target for things. You go to the bank, there's Bank of America. Kohl's, right? You want to buy a new iPad? If you're not on Amazon, which is on the list, you're probably going to go to Best Buy. You watch a lot of TV, there's Netflix. So you get the picture. Right? Sunoco and ExxonMobil are on here, right? We all get gas and get our cars done. We all use soft drinks and credit cards, whatever it might be. Right? So that's the idea of the list here. So this list is live as I speak. Right? And you can see how we rank and analyze these. Our watch lists are sorted by VST, which is value, safety, and timing, kind of our flagship way to rank and analyze stocks. It takes fundamentals and technical analysis and rolls them into one indicator. Okay. Now I have 41 stocks here. What I want to do is, because we're focusing on safety, right? Safety first, as I just talked about. I have the ability in the watch list to go to the relative safety indicator, right? That's the VectorVest indicator of a stock's safety. If I click on relative safety, what it does is take these 41 stocks and changes the sort to the highest relative safety number. This is on a 0 to 2 scale, anything above 1 being favorable, anything above 1.4 being excellent. Okay, so now we have that same list of 41 stocks, but now we have the safest stocks coming to the top of the list. Now, what I want to do is just illustrate the power of relative safety. I just want to take a minute out to do this. I have the ability to go into the date box here, and I can change the date, and we can go back. Now, we've chosen a period. I'm going to go back to January of 2019. Got some model portfolios built from there. What it does is takes us back in time. It will quick test these stocks. And the great thing about it is it'll take us through different market conditions, right? The pandemic sell-off it'll take us through, some of the other ups and downs of the market. So this is what the list looked like on January 2nd, the first trading day of 2019, so just a little over 2 years ago, and we're sorted by relative safety. So now the highest RS stocks are at the top of the list. All I'm going to do is go into this local toolbar here, and I'm going to choose Quick Test the Top 10. Okay, now this is the return. This is no money management techniques in place here. This is from point A to point B. Good quality, high RS stocks over that time frame outperformed the S&P 500. I have the SPX here. Okay, 30%, almost 31% annualized rate of return. That's pretty good. Let me close that out for a moment. Now, let's do this. I'm going to click on the RS tab again. And what that's going to do now is sort these with the lowest relative safety coming to the top of the list. So even though they're well-known stocks, we all are familiar with every one of these stocks, I now have the lowest RS coming to the top of the list. I'm going to use the same time frame. This is what it looked like on that date. And we'll quick test the top 10 here. Now, even these well-known stocks had 6 of the 10 were still winners over that time frame, but that's a dramatic difference in the return. We were over 80% when we sorted by relative safety at the top of the list. So we're nowhere near competing with the S&P 500 in this particular case. So just with a click of the button and testing these out is a very quick example of the power of relative safety. The next thing I want to do is go to our stock viewer page. Okay, I'm going to take us into what's called the stock viewer. And if I'm looking at the stock viewer page, okay, this is real time. This is what we now track, nearly 9,000 stocks in our US database, and they're sorted by VST once again. Okay, that combination of value, safety, and timing. Here's what I want to do. I'm going to change this date back to that same date of January of 2019 on the 2nd. I'm going to click OK. And that's what the stock viewer list look like using the VST sort on that at the close of trading on January 2nd, 2019. I'm going to click on the RS column, and I'm simply going to sort these by the highest RS at that time. Right? So the idea here is, instead of focusing on just those 40 stocks, why would I just do that? Why not open up to find the best of the best out of nearly, at that point, 7,000 stocks? Let me go find a list of those stocks and bring the highest RS stocks to the top of the list. Right? That's the idea. And so now we've got this huge roster of stocks to choose from. I'm going to go ahead and quick test those top 10. And look at that. We're up over almost 107%, again, versus the S&P 500 over that same time frame. So we've got even a better list. I enjoy sorting them by the very best performers that come to the top of the list here. Right? FTNT was the top performer there. Now here's really the visual I want to hammer home here. If I click on that and then right click on my mouse, and we can view a stock graph of this stock over the time frame. And I want you to focus. It starts with a 1-year look. The price of the stock is on the upper graph here. On the lower graph is the earnings per share growth of that underlying stock. Okay, this is this northeasterly direction. This is the pattern we want to see for stocks that reside in our retirement portfolio. If I change it to a 5-year graph, You can see how the stock continues to rise because its earnings are rising. That's not a coincidence. That as earnings rise, so too does the price of the underlying stock. And keep in mind, these are $50 increments here. You can see the stock having great growth with earnings and the price appreciation here. Okay, so it's when we build a portfolio of stocks that look like this, of high relative safety stocks. Okay, this is where we find our portfolios that look like this. Right? This is a retirement growth portfolio made up of high relative safety stocks that's nearly doubled. It's up 192%. These are the kind of results we see when we fill our portfolio with high relative safety stocks. Right? We minimize drawdowns. We still have tremendous growth. This portfolio averaged about 40% per year. So let me ask you, you guys may be familiar with the rule of 72. Right? Are you guys familiar with the rule of 72? A lot of retirement folks will talk about that. If you make 10% per year, it'll take 7.2 years to double your money. Right? If you make 20% per year, using the rule of 72, it would take you about 3.5 years to double your money. And if you make 36% per year, it would take 2 years to double your money. Okay, so imagine that. It's an amazing process. Now, your question may be, are we rigging this? Right? Is this a setup? Well, the rig part, the answer is yes, but it's rigged in your favor. Right? We're rigging this process because we're showing you to buy safe stocks that are rising in price in a rising market. So if you could double your money every 3 years buying safe stocks, I just want to ask you to interact with me in the chat box. How would that affect your retirement? Right, just a couple of words. How would that affect your retirement if you could double your money every 3 years? Yeah, Bruce says positively, a lot. Susan wrote kaboom. All right, that's great. Fantabulous. All right, fantastic. Yeah, so it certainly would. It certainly would. So, another shift you need to take into mind is to go from slow and stagnant growth to where you have solid growth, solid, steady growth in your portfolio. Right? That growth will have you buying good, safe quality stocks at the right time so that you can steadily grow your portfolio. This is another important part of your retirement investing model, which will allow you to build wealth, transform your legacy, and live financially free. Let's go to the third P in our retirement investing model, and that is to provide. Remember, you don't want to rely on your pension or Social Security, as we talked about earlier, to carry you through retirement. In order to continue living the lifestyle that you're used to, okay, in order to do that, you need to open up new income streams. And I'm going to share two main ways for you to do that. First, you want to get paid, right? We want to get paid dividends. One of the benefits of focusing on really safe stocks is they typically pay a nice dividend to the shareholders. We want to be able to capitalize on that. Now, I know everyone knows about dividends, right? But finding the best dividend paying companies for a lot of people is not the easiest thing to do. For example, a lot of folks will go out and if you Google good dividend stocks, look at the results you get, 850,000 results. And here you just get the stocks with the highest yield, right? They sort them simply by the highest yield. That's the last thing we want to do is chase high yield. What I want to know is, are they good, safe, quality stocks? That's what we need to know, right? You can go to NASDAQ.com. You get something familiar here. If you go there, you get the yield. But is it a good quality company? Is the company safe? Will it continue to pay its dividends? Other sites do the same thing, right? They don't tell you anything about the underlying company. Let me show you one of the things that we do here. Inside the VectorVest software, there are several lists of pre-built dividend stocks for you in the watch list viewer. Right? This is the perfect example. Here you see a list of all the companies in this watch list that have increased their dividend every year for at least 25 years or more. Okay, remember, they're not in here randomly. The stocks are sorted so the ones with the best combination of value, safety, and timing come to the top. West Pharmaceuticals is right at the top of the list. This is as of just a couple of days ago. I love this company. I own it myself, West Pharmaceuticals. Notice how the dividend continues to grow every year. This graph goes back all the way to 1995. Right? I like to call it climbing the golden staircase. It's grown their dividend every year. These are the types of stocks you want to add to your dividend growth portfolio. In fact, that's what we do. Right? It's called dividend growth because not only are the dividends growing, but you're also getting capital appreciation from these good quality, well-known stocks. Now, as a retiree, those are the two things you want and need. Now, notice that this portfolio shows a really nice gain of over 189%. This is a little bit longer term that we're looking at, and that's how you should look at your steady income portfolio through dividends, right? I want to give you the idea of the longer term of this. Okay, now that 189%, what that doesn't include in that equity curve is the nearly $50,000 that was received through dividend payouts throughout the life of this portfolio. Okay, so add another 50 grand to that. Right? Think about that. You're averaging an additional $5,800 in income each year through dividends. That's close to $500 a month. I don't know about you, but would an extra $490,000, $500,000 a month help you out? About you, helps me, right? And as I said earlier, that doesn't even include reinvesting the dividend. You don't have to reinvest them, but if you do, it'll grow even more. So that's the first part of income. Your second source for income is similar. We like to call it collecting rent from your stocks that reside in your portfolio, right? You'll be able to use one of the most popular, one of the safest option income trades available to you. Right, it's so safe that it's the main option trade retirement accounts will allow you to do. Now, in this day and age, there are option trades you can do, but it's been a long time that you've been allowed to do, sell call options in your retirement account. Right, selling covered calls is an excellent way to generate income. Let's take a quick look at how a covered call works. Here's a graph of a stock. It's trading at $176. ABC stock's trading at $176 a share. Instead of just owning the stock and hoping it goes up, what you can do is sell a covered call against it. Right? So to do a covered call, you either already own at least 100 shares of a stock, right? Or you go out and buy 100 shares. It could be either one. But if you've got 100 shares of a stock, you have to understand that there are traders and investors out there who will pay you money today for the right to buy your shares at a higher price at a later date. Right? Let me say that again. People will pay you today to take your stock away at a higher price at a later date. So how would that look? Well, you own the stock at 176. That's where the stock's trading. You sell someone the right to take your shares away if the stock price goes to above 180. And in this case, there's an expiration date to that. That would be by the third week in June. For that right, they are willing to pay you in this case, $10.33 per share. In other words, they just paid you $1,033 to take your stock away at a higher price. What could happen in this particular trade? A few scenarios. The stock could go down. Right? The profits from the call option you sold give you a cushion, and you would still have a stop in place just like you would if you own the stock. Any risk here is inherent in the fact that you own the stock, so you would treat it that way. So the stock could go down. Now, the stock could go sideways, of course, and that's fine because you would get to keep the $1,033. Plus, you can turn around and sell another call against it since you still own the stock. So you've just taken in cash, you've lowered the cost basis, a lot of advantages to this. And then finally, the stock could go up, and that would be great. Right? You make the max profit on your trade. You would keep the $1,033 in gains in the stock, and then you would also keep the capital appreciation of $4 from 176 to 180. That would be the max profit. Right? By doing this each month with a 10 stock portfolio of about 100 grand, you can be looking at $1,500 a month in income. It's just a great way to supplement that safe, steady income. Right? In fact, if you remember Jerry from earlier, prior to learning this income strategy. He told us his investing, as I said earlier, was just hit or miss, and he had no methodology. There's no worse way to describe your investing process to say that it was hit or miss and I have no methodology. After learning the covered call income strategy that we teach, he is now generating 2% extra income each month. So let me go ahead and ask you guys this time. I have two questions for you. Share with me in the chat box. First, how many extra income taps do you have open right now? Right? And second, what would the extra income allow you to do? Or another way to put it, what would the extra income allow you to stop doing? Give me a quick response in the chat box. A lot of people are, to the first question, when I asked how many income taps do you have open right now? A lot of people are saying none. And what could you do then? Maybe travel? Yeah. Stop working? Less concern? Right? That mental aspect, Craig said, less concern. Okay. Yeah, a lot of folks putting travel in there. I like that. Jay said, go to a Mets game. Okay, fantastic. So, yeah, it's a huge difference. So let's take a look at another strategic shift. When you implement the provide piece to your retirement investing model, you'll be able to shift from not having enough income to where you have a steady flow of consistent income, which will allow you to continue living the lifestyle that you're used to when you retire. And again, you'll become financially free. You'll become financially free. So you showed up today, I believe, for a few reasons. Okay, you're worried about the next market collapse, wiping away a good chunk of your nest egg, and that's causing you to be ultra conservative and not getting the gains that you see others getting. You're spinning your wheels. You want to grow your account, but it feels like your portfolio just isn't going anywhere. You may be here because you don't have enough income to replace the paycheck you were getting if you're already in retirement. Right? There's a fear there that you will have to scale back your lifestyle or you might need to rely on others. Maybe you're doing okay right now, but you're not quite where you want to be. Right? Maybe that's the reason that you're here today. And if that's the case, you may have no plan to get you there. So today I hope that you learned it is possible to take control of your retirement when you have a clear plan. You don't need to be worried about a market collapse when you have a strategic defense system, that you can see steady growth in your portfolio by using a solid growth strategy, and how you can generate consistent income with new income streams using dividends and covered calls. And the main thing I hope you learned today is that the secret to build wealth, transform your legacy, and live financially free is to make sure your retirement investing model includes the 3 P's of profit, provide, and preserve. So that brings us to the obvious question that you're asking right now. How do I create this type of system in my retirement portfolio right now? Well, I believe that you have a choice. You can choose to do absolutely nothing and keep doing exactly what you're doing right now. Okay? Same old thinking, same old results. My fear is that you'll be in the exact same place this time next year, worrying if you'll have enough money when you do retire. Right? You can choose to do it alone, maybe put together some of the things you learned today and learn by trial and error, but mistakes can be very costly. Or you can choose to do what I did and what Jerry did and thousands of others have done, and that is to get right to the solution. Why do all the work on your own when there's training available that allows you to bypass all the trial and error and get to success much faster? Instead of taking the long way from where you are to where you want to be, learn how to take the shortcut. That way you get your retirement on solid footing as quickly as possible. Now, I want to give you that plan if you and I were to work together for 5 weeks, literally, you and me in a room every week for the next 5 weeks, here's what I would get you to do. It's a simple plan called the Retirement Portfolio Transformation. Before we get to that, I need to point something out. Albert Einstein said that everything should be made as simple as possible, but not simpler. It's important for you to understand that this is not a get-rich-quick scheme. It's not some magic pill where you should expect results in the next 24 hours. This is serious and it requires some effort on your part. If you're not going to commit to it, honestly, then don't do it. It's not for you. Okay? And you can log off now. This is for serious people who take their retirement seriously and who are willing to put time and effort to learn the system. But this is why VectorVest was created and why we have put together this retirement portfolio transformation for you. We put it together for serious people who want a simple plan to set up their retirement portfolio for success. The system works. I know that. But you got to do work. There's no magic pill. There's no such thing as go to bed at night fat, take a pill, and wake up thin. That doesn't work. There is work in the real world. You need a plan, and if you're willing to do the plan, then you'll get results every single time. By transforming your portfolio, you'll be able to build wealth for you and your family, transform your legacy and create a better life for your children and grandchildren, and have that financial freedom. And it's a simple plan called the Retirement Portfolio Transformation. The easiest way to explain the course is for me to map it out for you. Just keep in mind profit, preserve, and provide as I go through this. Right? We remember the 3 Ps. The course will guide you through setting up the 3 Ps in your retirement portfolio. First, we'll build a strong foundation for your retirement. Okay, this is where you'll get clear on your goals and objectives. Always remember that a goal without a plan is just a wish. Okay, remember that. So you'll learn how to treat your investing as a business. You'll set what's called the SMART goals and objectives and create your own vision statement. Next, you'll learn how to increase your capital with a safe growth portfolio that we talked about. Your portfolio will steadily grow every year. For that to happen, you need to fill it with the right stocks and manage them the right way. You got to put the best team on the field. In this module, we'll show you a tried and true process so you can complete your profit transformation. Next, we'll talk about dividend growth. Right? You'll begin to provide the transformation by learning how to build and manage. Right? That's the key. Build and manage your prudent dividend growth portfolio. Dividends are a source of income every retiree should take advantage of, but not all dividend stocks are created equally. The outcome of this module is that you'll know exactly how to identify the best dividend candidates. You'll know when to buy them and how to manage them. In Module 4, we'll take step 2 of generating the income. We'll complete your provide transformation by teaching you 2 of our go-to option income trades. One is the covered call I talked about. The other, very similar, is selling put options. In Module 4, we'll talk about that. Every retiree needs an additional source of steady, reliable income. Banks, bonds, and or Social Security won't be enough. Even if you never traded options, you'll understand what we're doing here. Understand that you don't have to be an options expert for the option trades that we show here. I'll show you how the trade works, when to implement them, and how to correctly set them up and manage them. So at this point, your retirement is set for growth and for income. Okay. In Module 5, you'll learn how to preserve and protect your net worth. Okay, it's Module 5. I stated earlier, to me it is, you can't grow your portfolio if you don't know how to protect it and defend it. A lot of people don't have a plan for when the market goes against them. You don't want to just sit there and worry about what could happen. You need to take control. And this module will complete your retirement transformation by teaching you how to preserve your assets. Okay? You cannot grow your portfolio if you don't know how to protect it. By learning all of this, at the end of this course, you'll know how to grow your account, generate consistent income, and protect your capital in all market conditions. So here's the thing. If I were to work, say, one-on-one for 5 weeks, literally just me and you together going through this, it would run about $29.95, almost $3,000 to do that. Okay, the retirement portfolio transformation. Let's take a quick look. Full transformation course. As I said, the value is $29.95. Here's what I'd like to do. I'd like to give you access to the full retirement portfolio transformation course. We've put the entire course together in a self-paced recorded atmosphere. In addition to the course, you get a few limited bonuses when you register today. So to help you implement the things you learn in the course modules, you'll also get 5 live mastery support sessions valued at $995. My favorite part of the course is doing the live sessions with everyone. I'll take a look at the things you're doing and questions that you have and help guide you through this entire process. Right, if you can't make those live sessions, don't worry about it. You'll be able to submit your questions ahead of time to a private email address designated just for students, and we'll send you a recording of the session. Additionally, you'll get 5 weeks access to my members-only group coaching sessions where you'll see in real time how I manage our real money retirement portfolio. Each week, you watch me find, select, and set up our income trades. So basically, each week you'll be seeing all of this in action and how we manage it as we go through. Plus, if you don't already have access to the software, I'll give you access to the VectorVest software that I use to help speed things up. Folks, this is also completely guaranteed. Okay? They say there's no such thing as a risk-free trade. Well, this is one of them. Right? You probably won't need this, but if for some reason you take our retirement portfolio transformation and you actually do what I teach you, now here's the thing, because please listen to this. Not if you buy it, but if you actually do it, it will work for you. Right? After the course is over, if you show you've done the work, come to the classes and watch the recordings and done the assignments, you're still not satisfied, I'll gladly give you a refund. Okay. So if for some crazy reason it doesn't work for you, like the 1% that it doesn't work for, and you feel we haven't taught you how to set yourself up for a secure retirement, just send an email within 7 days after the course ends and we'll give you all of your money back. This gives you that peace of mind. We are very confident that you will love what you get here. You are not locked into any contracts or anything like that with us. Okay, so again, the total value, if you put everything together, is just over $4,300. Here's what I'd love to do. I'd like to give you access to the full course and all of the bonuses for only $595. That's an early bird special, which is only good through Monday. Okay, but since you've spent an hour with me today, here's what I'd really like to do, just for you guys for taking the time to be here. If you order before the end of the webinar today, okay, instead of paying $595, you can get it for just $495. Now we're going to stay on and answer any questions that you have, so we'll be here for a bit longer. Right? Order before the end of the webinar, you get it for just $495. That means you'll get the full course, a full year's access to the course, by the way, for one full year. You'll get the 5 live mastery sessions, access to the software, and access to the members-only retirement group coaching for the 5 weeks. The $495 price will only be for those who register before we finish up here today. Okay. Also, the $495 price is even lower than our elite pricing. So if you are an elite member with VectorVest, now would be still be your best time as well to order. Just go to www.vectorvest.com/transform, and that link was put into to the chat box. You can go to your chat box now and just click on it, and that is a today only webinar deal. Okay. Now, there's a saying that the best time to plant an oak tree is 20 years ago, so that you can be sitting under it now enjoying its shade. Do you guys know when the second best time to do that is? Well, that's today. Today is. It's not too late to begin to prepare yourself for retirement. And this is a question I'll ask, but you should be asking yourself this question. How much did it cost you back in 2000, 2008 by not having this information? If that number is more than $495, then let's fix things once and for all. Let's make it so you never have to experience 2008 ever again. Let's make it so this year is the year you begin to safely grow your retirement and generate consistent income month after month. Here's what I'd like to do, what I'd like you to do right now. Go to www.vectorvest.com/transform and enter your details there. You remember Rob from earlier, after he learned the information we teach in the retirement transformation? This is what he had to say. I realized I could not rely on others and that I had to take personal responsibility for my own investments. In March of '09, using VectorVest's unique market timing system with its fundamental and technical analysis stock picking techniques, I went into the market, and by the end of that year, I had recouped all of my global financial crisis losses. I've been relying on VectorVest since then and now spend about 15 to 30 minutes a day using the program to manage my retirement portfolio, giving me the money and time to do the things that are really important to me. Okay. So like I said, that's my plan, a self-paced retirement transformation series. If you order before the end of the webinar, you can get it for only $495. Let me summarize all this for you. VectorVest was started in 1988 with the hope of delivering great investing and trading opportunities to Main Street. Over the next 5 weeks, I'll show you how to set yourself up for a secure retirement. There's a saying that wealthy people spend money to save time, and that poor people spend time to save money. Now, that is one of the big benefits of all this. It puts all the tools you need in one place to save you a lot of time. You'll know how to grow your account, generate income, and most importantly, protect your capital. Just go to vectorvest.com/transform. Take a step towards financial independence. We'd love to see you with us, and we look forward to working with you. Now, if you know this is right for you and you are going to join me, type 2 words into the chat box. I'm in. I'd love to welcome you to the class by name. All right, folks. So there's a couple. Catherine and John have typed in, I'm in. Daryl has typed in, I am in. Fantastic, guys. Thank you for taking the time to go do that. You'll want, Thomas is also in. You guys, you're going to want to keep an eye out for an email that's going to give you all of the important information you need to access the course. Peter's having an issue with the link. What I'm going to do, I'm going to take a quick sip of water. I'm going to ask my friend and colleague, Mr. Brian D'Amico. Brian, are you there to come in and help out with
I
some of the
am.
questions that'll come in?
Sure. Can you hear me all right?
I can. Thank you. I need a quick sip
Oh,
of water,
yeah.
but yes, thanks for being here and answering in the background. And
Fabulous. Well, lots of excitement there in the chat there, Jim. I know there's a bunch of people typing in I'm in, but there was a gentleman earlier. His name is Phil, and I gotta go back and read his comment because he took your training earlier. He's actually been doing this for several years. And I'm going to go back and read a couple of comments that he typed in because he was typing as you were teaching. And so he said that he used those RS stocks. So he typed this in the chat box. He said, I used RS, plus he did a couple of other filters, and he chose 14 stocks. And he said, back on that same day in January of 2019, and he says that he is up 196%.
wow, fantastic.
And he's like, but I could always do better.
Yeah, that's great. I love that attitude. Well, that's great to hear. Great to hear.
And as he just kept going, he's like, you were showing WST. He said WST was one of my chosen stocks. And then you started teaching about covered calls. And he typed into the chat box, he said, I had 4 covered calls. So he's gone through your training on that too. He said, I had 4 covered calls when the confirm down happened, and he still won on 3 of them. So he's got not only the growth in his portfolio, it looks like he's also generating income with the covered call strategy. So I appreciate that he was typing that in.
Yeah, that's great to hear.
That was fantastic to hear. There's another gentleman who went through your covered call training as well. I got to find that one. I think it was Jimmy. Jimmy had typed this in a little while ago as well. And it's going to take me just a second to find Jimmy. He says, "Thanks, Jim. I got to head out, but thanks to your class on options, I make about as much in options as I do in stocks, with a lot less investment." So he's learned a little bit about investing in options, and obviously they're not very difficult for him to do. So also shows it looks like that you're a great instructor there, Jim.
Well, it's always great to hear from folks who are doing well. Fantastic.
All right, so let me head back. I got to scroll back down to some of the questions that have come in. And like you said, Jim, there's a bunch of people who said, I'm in, and you gave great advice. Check your email. So everybody should check. If you're in, check your email, because you would have gotten all the instructions via email. Directions to access the course, which is actually pretty simple. All you have to do is go to university.vectorvest.com. But the directions will be in there, and you'll be all set to go. Now, this class, Jim, you mentioned that they get access to the retirement transformation course. And so all the modules are all ready right now, right? People can go in there and actually probably this tonight, if they wanted to, I guess, start going through the training. Is that right?
That is correct. And Brian, I can actually bring that up and show them what it looks like if you'd like.
Yeah, sure.
So I'm in VectorVest University. This is my dashboard as it'll show you. And if I scroll down to all of my courses, naturally I have access to all of our courses, but I come down and this is what you'll see when you sign up. You'll see Retirement Portfolio Transformation, and I'll hit Start Course. And from here, you'll see all of the resources that we have. So there's a little, watch me first, little let's get started video. And as I showed just a minute ago, all of the modules, the foundation builder, building a growth portfolio, a dividend growth portfolio, and all of these will have us in place. When I click down here, you'll see there are the videos within the within each module. We break them down. We've done it a little differently here, where we break down the important key elements in several shorter videos to help you concentrate more on that. So that's where it's all set for you. You go to resources here, and you'll be able to see all of the slides that we give you. Okay, and any other things that go with it. For instance, in module 4, we have a great spreadsheet we use for calculating our covered call trades. It's a great way to journal your trades. So just as an example, you'll get that in module 4 when we talk about selling covered calls. But you get access to this for a full year, and that'll all be available to you. That's what it looks like in the program.
All right. Well, Jim, now you mentioned those live sessions. Maybe tell people again, what's the purpose of you're having 5 live sessions. Now, you're not going to be teaching the course all over again, but what's the benefit of those mastery sessions that you do?
Yeah, that's a great question. It really is my favorite part of doing these courses. What we do is, let me go back. As I showed, right in the here, we have the modules. So what we don't want you to do is mistake the modules with the mastery sessions. So the modules will teach you the fundamentals of whatever objective we're looking to do. So say in module 2, we're looking to increase your capital with a safe growth portfolio. We'll walk through those steps and we'll teach you there. What we do in the mastery session is we try to implement those. So we're live. We're doing it during market hours, so we can actually implement the ideas and the strategies that we talk about. Not only that, we're there to answer any questions, of course, that you have from the module. So again, it's important to understand the difference between the two. The module will teach you the foundation of the topic that we're on, modules 1 through 5. The mastery sessions gives us a chance to really delve deeper, implement it, and answer any questions that you have.
All right. Now, if they miss one of those live sessions, is that okay?
Yeah, that's the great thing, because all we'll do is we record them and archive them right back into the university. And so you'll have access later on that afternoon or evening to the live session. So a couple of things you can do. We have the dedicated email bin. If you know you're not going to be there, let us know. Say, hey, I'm not going to be there, or I can't be there, whatever. Send the question to the email, It will address it there, and then when you go back and watch the mastery session, we'll be able to get to your questions. So you really don't miss anything.
All right. Now, a lot of your questions, folks, that I see, like dates and times and things, if you actually go to that link that is on the screen, vectorvest.com/transform, and if you go there, a description of all the modules will be there, and you'll find the description of all the bonuses. Jim was only able to touch on a couple of the bonuses, but you'll be able to see all the different bonuses that you get are listed there. And now, as far as the dates of these mastery sessions, the first one actually starts. They're typically going to be on a Monday, but the first Monday session is a holiday, so we had to move it to Tuesday. So the first mastery session will be Tuesday, the 7th of September, and then it's the next 4 Mondays. All right, so the 13th, 20th, 27th, and 4th. All right. So that's when the live sessions will be. And don't worry if you can't make one of them. We will have them recorded for you. And you could submit your questions to that private email address that Jim was talking about. And the sessions, oh, sorry, I forgot to mention this, are at noon o'clock Eastern time. All right. So, Jim, now if somebody's going through this course, would you say that there's a lot of help available? Like, what if somebody needs help when they're going through the course?
Yeah, well,
What are the best resources?
yeah, the great thing is that you can you have several ways to do this. If there's something with the VectorVest program you need help, of course you can always call product support. Anything with the VectorVest program itself, we're here to help you. We have the dedicated email bin. So we're able to focus on questions for folks who are in the course. So you can always send an email, and you'll have that information once you join the course. We'll give you that email link, and we're there again with the dedicated email. Allows us to get to it a bit quicker. And then of course the mastery sessions are going to be, again, I'll say it for the third time, and my very favorite part of doing this is when we can take what we've learned and actually apply it in real time. And again, as Brian said, even if you don't make it to the live session, you can always go back. We archive the mastery session later that afternoon or evening when we get it into the program. So there's a lot of support there for you.
All right. Now this $495 rate, Jim, is actually lower than the VectorVest Elite pricing, isn't it? I think the Elite pricing is like $497.50, if I'm not mistaken.
That's right. Right. This fast action bonus is actually save an Elite customer $2.50. See, we are making you guys money already. We're making you money already. But yeah, and I guess I don't know. I'm just going to comment real quick because I saw something in the chat, an Elite customer, and John wrote, "Don't click on the Elite customer link if you go in to order the course." And I'm just reiterating what I thought I saw there. Hopefully that's proper information. Just sign up for the course at $495. You don't have to indicate that you're an Elite subscriber.
All right. Next question is, now there are some people in the class here who are actually VectorVest members who've been with us for quite a while, who are taking other courses at the current time. And so that's one of the things that I know it's bad for sales for there's like 2 or 3 of you in the chat box, so I'm just going to answer all at once. If you're taking like three courses, I mean, if you're a special person who can handle the workload, I mean, like you're in college taking 3 different classes, then more power to you. All right, they are 3. The courses that we offer here at VectorVest are unique. There's not like overlap between this and like an options paycheck class or the successful investor class. They would be different classes. So if you feel that you could handle it, then do it. If you like to just focus on one thing, then focus on one thing before you take another thing. So this course, as Jim described, is focused on retirement. And he described the main things that he focuses on here, and other courses focus on other things. All right. So, and if you're in one of those other courses, you kind of know what those focus on. All right. Chet had just I just saw this come in, Jim. He says, Jim, you mentioned a couple of two different portfolios, growth and dividend. How much would you say of your total portfolio do you allocate to each of these things?
Yeah, good question, Chet. We talk a lot about in the early modules about asset allocation. Um, we teach these three core strategies. So we have what we call the buy right portfolio, the dividend growth portfolio, and the growth, the capital appreciation. Ideally, right, and it all depends. Everyone's has a different size portfolio. We understand that, but ideally, we would like to take. I'll paraphrase one of the slides that are in there. We take 30% into each portfolio and we leave 10% cash to be able to buy protective puts. Okay, that would be the ideal setup, but it doesn't have to be that. It's going to be once you're in the course and you're looking at, the different ideas and the different objectives and goals that are set, you may decide you want to lean more towards capital appreciation. You may be either closer or already in retirement and say, you know what, I'll pass on the capital appreciation right now, but I do want the steady income. So you'll adjust your allocation, and that's what the course and the mastery sessions will do, is help give you more things to consider while you're making that decision.
All right. Now if you have any questions that if for some reason if we miss your question, we'll try to stay on here for the next, several minutes here answering your questions. But I'm going to put our phone number in the chat box too, 888-658-7638. That's our US and Canada number. Give us a call there. Now, Jim's been teaching this for quite a while. And if you have taken a class from Jim called the Ultimate Retirement Solution course, and if you've taken that, you are eligible for, since this course is kind of an evolution of that one, we would offer you a refresher price. If you feel you qualify for that, give our team a call. You could always email our team, and there's a greatly reduced refresher rate for you. But that's if you've taken that course, that specific Ultimate Retirement Solution course. Just give our team a call and they can hook you up with a refresher discount. And I think, Jim, is it correct that I believe if they're a member of your coaching group, would you have a bunch of clients in your retirement coaching, I believe, or is
Yes.
it just that?
Yeah.
All right,
No. If you're in the retirement coaching group, you'll also get that price. That is correct.
all right. So what I'm going to do, folks, is I'm going to answer DJ's question here in just a moment, but I'm going to put a little flag on my screen. And there's been a lot of things that have flown through our chat box here. So if you have a question about this course, the material that we talked about today, and we missed your question for some reason, would you please just go find your question and maybe copy it and paste it back into the chat box? That way, I don't want you leaving today's session thinking, oh man, they ignored my question or they missed my question. So just go ahead and copy and paste it in the chat. Either we'll answer it verbally, Jim will answer it, or we've got some people in the background like John and myself who could work on typing you an answer. So do that now if you don't mind. Just copy and paste. And I will, since DJ asked about the difference between this and the Successful Investor course, I could touch on my part of that, Jim, since I teach the Successful Investor course, and then you could add to like, hey, this is what we do in addition to that or differently in the transformation course. So DJ, I would say the Successful Investor course is great if you're just I don't want to say just starting out, but if you want to build a strong foundation in just buying and selling stocks, right? So if you've struggled buying and selling stocks and you want to learn how to do that the right way and really just build your confidence and skills and the ability to follow a plan of buying and selling stocks the right way. We dive deep on that topic. Now, Jim, you obviously in today's session, you had a broader brush for retirement. You want to kind of touch on what you're doing.
Yeah, the difference is it adds a few things. It takes on the different concepts of not just you know buying stocks, but talking about managing, talking about different objectives. So yes, we talk about capital appreciation, buying good quality stocks that are rising in price in a rising market. But we also offer for the retirement-minded investor, of course, the dividend growth portfolio and the selling covered calls, and we have added a section on actually selling put options as a source of income as well. So I think that's really one of the differences is that we do focus in retirement much, well, not much more, but in a different way on capital preservation, right? Taking it to a level where understanding how to buy puts on the SPY or any of the major indexes, IWM or the Qs or whatever it might be, to protect your overall portfolio. So um, I think those are the differences.
All right, now SS typed into the chat box here, Jim, and SS is worried, is like, thinking, all right, is this right for me? I want to learn this training, but I fear that I'm going to need a bunch of extra software. So SS says, can I do what you're teaching, even if I, just using the base VectorVest service?
Yeah, you can. The basic service in the VectorVest program allows you to do the things that we do. Now, once you're in the course, we didn't you get access to a couple of pieces of software that we do show and use. But the basic setup of our course, the basic program will allow you to implement everything that we do here. So listen, I have, obviously I use VectorVest real time and I have all of our add-ons and they help. But if you have intraday or the real-time program, you're going to be in place to implement all of these techniques that we use.
All right, and Daniel wants to know if is this course right for him if he already has experience with options.
Well, I think so, Daniel, because I mean, of course, that helps you to have the understanding and experience with options. But again, the, I don't want to confuse anyone or scare anyone off. This is not an options portion of the course. It's simply focusing on two important techniques and two important trades: selling covered calls and buying protective puts. So if you already have that experience, that's fantastic. What we'll be able to do, or what we try very hard to do, is for you it would be more of, okay, when's the best time to implement these? What do I look for in my portfolio? And so in that sense, it would be helpful in that way. But again, you don't have to be an options expert to do these two basic trades that I think, this is my opinion, that are essential. If you're building and managing your net worth, your nest egg, right? The covered call and the protective put, I think are very, very important.
All right. And now so Richard just typed in, he says, I just finished purchasing with a big exclamation point at the end. So, and DJ says, thanks, see you in class. So if you joined the class and we just forgot or missed your name, type it in the chat box. I know Jim would definitely love to see his students showing up in the chat box saying, hey, I'm in. And that way we can read you out loud as well. If you've already ducked out, we can totally understand. We'll be here for the next few minutes answering questions. So that $4.95 rate will be good while we're here. It'll switch to $5.95 when we're done. And then it'll be $5.95 until Monday. And then registration closes Tuesday. And then all these bonus, the live mastery sessions, like these bonuses go away Tuesday, when registration closes. All right. Let's see. Marco just typed in a question. Says, is it achievable for each stock if held for a year, you can get 10% per year with dividends and covered calls? And now I'm not really sure what Marco's really asking there, Jim. Can you decipher it, or do we need more info?
Well, I can try and give a very general answer to Marco. Listen, the short answer is, can it be achieved? Without a doubt. Right, a 10% if you're collecting dividends and selling covered calls. Now, is that a guarantee that every stock every year will do that? I'll never do that. I'll never guarantee 100% winning trades. I'll never guarantee anything like that. And if you're in somewhere where they do guarantee that, you should log off and go away, because it doesn't happen. I took my Series 7 in 1992. I've been doing this a long time. Anyone who tells you they have 100% winning trades is lying to you, quite frankly. So that's kind of the setup to my answer, Marco. What we do is, yes, one of the portfolios we showed earlier, that the growth portfolio averages 40% annualized rate of return in just under 4 years. Right? So an annualized rate of return means it might be, a little less one year and higher the next, but over time, and this is the key when we're talking about retirement portfolios. I don't want anyone looking at it like, well, what did it do last month? We're not swing trading, we're not day trading. We're building and managing a safe portfolio where capital preservation is number one. So the short answer, Marco, is sure, without a doubt. Um, and like I said in the presentation, we've proven these techniques to work. That doesn't mean it's doubling your portfolio every 6 months with 100% winning trades. I'll never pretend that happens here. So hopefully that helps, Marco.
All right, thanks, Jim. And welcome to you, Ian. Great to have you in the class. And I think, Jim, I'm looking through. I don't see the next question. So I think it's okay to wrap things up. So I'm going to pass it over to you to do a final wrap up and then close the session.
All right, fantastic. Well, Brian, thank you, and thanks to my colleagues helping out and answering questions in the background. Um, Listen, thanks for taking the time. If you guys are here and are interested in the course, we do our best and to make sure that you end the course with all of the things we talked about in the special session today. If you can't make it this time, hopefully we'll see you next time. So please stay safe, stay healthy. Thanks for taking the time, and we do hope to see you in the course. Thanks, everyone.